is another ballgame entirely. So meaning that if I've deducted withholding tax on your dividend and I've paid over to government, and in payment, I will have disclosed that so and so is the beneficiary of this dividend. Government is already aware of that payment. So that is one of the reasons for withholding tax. Withholding tax also guarantee steady tax inflow on a monthly basis to government. That means that government does not need to wait till the end of the year. For example, if every taxpayer in this country have the same year-end period, for example, December, to pay tax, does it mean that government have to wait till December before government can have money? And actually, we are not here to talk about what is the essence of taxation. And tax is one of the, it's not even major, it should be major source of income to government. So withholding tax help government to have steady inflow on a monthly basis. If there's a deduction from A and B, sales and B, and that is paid over to government can have something for their statutory obligation to say we are not here to talk about that. So it is not another type of tax that should be synced. It's not another tax for tax. It is an advance payment of tax. In some case, it can be final and conclusive. Example is frank investment income dividend. So next slide, sir. Withholding tax is an advance payment of income tax. That is, it is deductible from every payment for transaction liable to withholding tax and all type of contract and agency arrangement other than sales and purchases in the ordinary course of business. That is, any sales that fall within the norms, custom, and practice of a business. A lot of issues in this. So I have few and 1 hour to discuss this. So I won't go to what are the issues on ordinary course of business, what are things that are not ordinary course of business, what are contract. That is another thing entirely. So therefore, if a transaction or part of transaction, e.g., reimbursement of cost, is not going to give rise to income tax, withholding tax will not apply. That is very important. I will give you an instance. Mr. Obina did mention about a reimbursement element of invoice when he was doing his presentation of VAT in the case of security service company, where you have to provide personnel, you have to pay for stationery and all the rest. All those personnel costs, stationery costs, your invoice should be structured in a way that will enable your customer to have your reimbursement element and also to have your service charge fee, so that reimbursement elements are not supposed to be income to you. It means you have incurred cost on behalf of somebody and you are just asking for a refund. So meaning that that amount in question is not an income to you. It should not be subjected to withholding tax, only if you structure your invoice very well. But if you fail to structure your invoice very well, if you lump everything together, I'm afraid withholding tax will apply on everything. Similarly, if a payment is made to a non-resident, listen well, if a payment is going to non-resident which has no permanent establishment in Nigeria for work done wholly outside Nigeria, please note, outside Nigeria, no Nigerian tax liability will arise for non-resident company, and withholding tax which should not be deducted from payment to the company. Now, we are talking about non-resident, permanent PE, permanent establishment, or significant economic presence. This is not what we are talking about. We are saying if that service is rendered outside the country, withholding tax will not apply because that amount was not accrued, derived, or generated in Nigeria. Withholding tax will not apply. So meaning that if an NLC that does not have PE in Nigeria comes to Nigeria come to you and render service to you, and it is wholly done outside the country, it will not apply. Withholding tax will not apply because that amount will not be subject to the liability in Nigeria. However, if partially some certain portion of the service is rendered in Nigeria, withholding tax and tax will apply proportionately. That should be very key. So next slide, sir. So applicable tax law governing withholding tax. These are the laws governing withholding tax, and you agree with me that you cannot see withholding tax law. No, you cannot. Unlike one we have value-added tax act, income tax act. So that's why we said withholding tax is not a separate tax. These are the applicable tax law governing withholding tax. Number one is Company Income Tax Act, CITA, as amended to date. So this is section 78 to section 81. Section 78 talked about withholding tax on interest, that is deduction of on interest. 79 talk about deduction on tax on rent. That is when you can see that somebody will, when you serve as a pay rent, or somebody has leased a portion element of his property to you, you have to deduct withholding tax if you are agent of government. If you're an agent of government. So I need to mention that if you're an individual out there, you are not an agent of government. You are not supposed to deduct withholding tax if you're an individual. That is why you will not be able to charge rent, withholding tax on your rent, pay to your landlord if you're an individual, because you are not recognized under the law. If an enterprise, partnership, limited liability company, you automatically an agent of government, so we can charge you withholding tax. Section 80 talk about the deduction of withholding tax on dividend. So Personal Income Tax Act, section 62, 68 to 72, Petroleum Profit Tax, PPTA, section 56, withholding tax regulation, that is at the pronouncement issued by Ministry of Finance, 1997, 2020. These are the applicable tax law governing withholding tax. Next slide, sir. So what are the compliance requirements for withholding tax? So withholding tax remittances, every agent of government, be it business name, enterprise, sole proprietorship that is registered now, partnership business, limited liability company are expected to remit withholding tax. Though you are not expected to register separately for withholding tax, your registration for company income tax automatically register you for withholding tax. So what you just need to do is to remit and file. Those are the compliance regulation requirement for you. For withholding tax remittance is to be made on or earlier of date when the payment is made or credited. Remittance is to be made as follows. Now, section 78, if you look at section 78 of CITA, a lot of things, I want to tell you what we normally use in my firm. We always advise clients on what is in law. We tell you what law says. We will tell you what is obtainable in practice. We also tell you what are the tax implications. What am I saying next? That look at this section. Section 78 said the earlier date is when you credit someone or invoice. For example, if somebody invoice you now, section 78 is telling you that you should go and pay withholding tax, even when you have not collected or when you have not deducted the money. So now that is something that is what the law says. So what is in practice? The practice is to deduct, remit withholding tax when you make payment. That is what is in practice. So let me now go to withholding tax remittance to FRS for company on